If you would say a few sentences about yourself, a bit of a background, and then one observation, if possible, around European venture capital and angel investors and why you think you have been repetitively successful and it is such a close club, and how you see the future.
Yeah, hello. So I'm Oleg Cheltsov, a co-founder and CEO of Fotolio.com. So Fotolio.com, it's a marketplace for stock photography, where a crowdsourced marketplace for stock photography, where any photographer can upload pictures. Our internal moderator will check the quality, the copyrights, and if it gets accepted, it will enter in our search and be on sale for all the designers in the world who need stock images. So our model is a little bit disruptive in the sense that it's we license images 100 times cheaper than what used to be before, like people like Getty or Corbis, and to license an image with Fotolio will cost you a couple of dollars versus hundreds of dollars. So before Fotolio, I founded a web hosting company called Amen.fr, which was the leading French web hosting company that I sold in 2004. And as an entrepreneur, in fact, before technology, I was searching quite a lot. I mean, my road, and I started, in fact, in '94 in Russia, in completely different field. I was organizing concerts, so I was probably one of the first who was bringing like big events in Russia. I did concerts like ZZ Top and U2. And after that, I tried myself in mail order. So it was again the first company in Russia who was doing mail order. And at that time, I was selling diet products, which was very, very successful. And after that, I did another company also, which I sold to an Ukrainian company, like an Audiotex company. So people were calling like a prepaid number more expensive, and we were doing all the kind of services, even erotic services, which was working very good. And as you can imagine, and now I'm still with Fotolio, and since 3-4 years I have been investing in many companies, like as an angel, so more than 40 companies, and this is it.
My background is much more boring because I was not an entrepreneur before. I was an old kind of businessman from the media business, you know, that old business of the 90s. And then I started making some investments in the internet, and they paid out well, so I continued, and then I was somehow called an angel. So that's what I do. I'm an angel, and since my background is not that interesting, my message is Luis Caviedes, your partner for investments in Spain.
Hi, my name is Luka Skadowski. I'm a internet entrepreneur. I founded Spreadshirt. Then I co-founded a few other companies like StudiVZ in Germany, Brands for Friends. I did a lot of angel investments. And today I'm running a company called Team Europe Ventures. And what we do is like, we call it company building. Yeah, it's sort of like incubation. So we start 2 new companies each year. And we also have a seed fund. And with the seed fund, we do seed stage investments. Interesting, makes sense, right? And so we do only about like 5-6 investments a year. So for a seed, rather like a selective approach. Yeah, that's it. So much for introduction.
My name is Stefan Glenzer. I'm self-employed my whole life. I've never worked a single day for a company, which I'm very proud of. My best job ever was being a DJ in university years. This is still unbeaten. Other than that, I was founder of Ricardo in the first internet wave, which we took public in '99 in Germany and luckily sold in 2000. Moved to London, was lucky again in having met the Last.fm guys in 2004 and successfully became their chairman. And since 2007, I'm very active as an angel, supporting the European early stage entrepreneurial crowd. Have set up an incubator here in Clerkenwell, in Shoreditch, East London, called Whitebear Yard. And actually, my aim is to build global successful companies out of Europe.
Cool. I'm Brent Homan. I did work for some people once, and then I got fired. I got fired from my first job, and yes, one of the other ones was helping start QXL that ended up merging with Ricardo. And then what did I do? I started lastminute.com, I guess, and then since then I've started mydeco.com, made.com, and I'm behind, I guess one of the main guys behind profounderscapital.com, which has done 6 investments so far. It's another early stage fund. I'm on the board of The Guardian, board of TalkTalk, and various other stuff I won't bore you with. And I guess you've asked about what's changed on the scene. I think it's getting crowded up here. That's what's great. And you could have had another 20, I think, angel type funders now, and you couldn't 5 years ago. So there's definitely a change in the funding environment. I think the issue is there a change in, as Stefan says, the companies that are European companies that are shooting the lights out globally? And I think that's what we need to see more of, because there's still lots of local players that'll get backing, but let's see the big global players.
Are you looking also at non-internet opportunities, or are you 5 solely focused on internet?
Personally, I have investments in Europe, US, and Asia, so Japan, everywhere where I like the idea and I like the team, and generally I like to invest in companies which I had the idea myself, but I didn't have time to execute them. So this of course attracts very much my interest, and it has to be things that I understand, which is not always the case. When it becomes too complicated, I don't neither have time nor envy to get too much into it, and preferably transaction-based businesses. So whether it's euros, dollars, or yen, I mean, it's as long as it's a transaction, or ruble, it's good for me.
Louis, do you invest outside Spain?
No, well, I of course invest in global companies, but they are based in Spain. I only invest in internet, and I only invest in Spain. I have tried to invest outside internet, but just can't get excited. I mean, I don't see the big opportunities that I see in the internet anywhere else. So I do only internet, only Spain.
So myself, or rather Team Europe Ventures, we focus on the internet exclusively. So this is like such a great industry. There's still so much opportunity out there. So we don't need to do anything beyond it, I guess. Yeah, and I'm always like amazed how many good companies there are, and stuff like that. And on the other hand, the whole ecosystem in Europe is still so underdeveloped, like with the whole financing ecosystem. Even I mean here, I know a lot of VCs are here as well, but like compared to other markets, yeah, it's still so nascent. So there's a lot of opportunities, so we focus on it.
Again, I'm certainly a digital dude. But I did one investment in 2010, which has a big advantage, because since that investment, my kids actually do understand what I'm doing, and I invested in an ice cream shop in Notting Hill.
The one under my office, yeah?
Portobello.
Portobello, okay. I can't give you custom then. No, digital, yeah. I mean, I do other stuff sometimes personally, but not really relevant.
So how do people find you? How do they get to you? And what is it you are looking for? Is it the idea? Is it the management? Is it the founder? Is it scaring you when people come with too fancy presentations? Would be nice to hear a little bit for some people in the room how they should approach finding an angel, because I think we all believe that an angel can add a lot of value. Sometimes, because Europe is not as good in the infrastructure on early stage VCs, sometimes significant value. Maybe Brent, you can start. What are you looking for in people approaching you?
I mean, I guess we're not actually, I've sort of gone away. I've made 10 angel investments before, and to be honest, it's a tough job. You know, it takes a lot of time, it's quite distracting, and you never do enough due diligence, and you often invest in people because they're your friends, so you feel you have to, you know, all that sort of stuff. So actually, although some of them did fine and some won't have as ever, but basically, so that's why we set up ProFounders to be it's only entrepreneurs investing in ProFounders Capital, but there are 2 guys who run it. How to find it, profounderscapital.com, and if you can't work it out from there, then please don't approach us. And what are we looking for? I think it's difficult because it's difficult to say something interesting because too many people say the same thing. It's like, yes, everyone would like something with a little bit of traction, but no revenues is fine. And risk, but we will take risks. We will sit around the table with my partners and they'll say, well, this is a bit risky and whatever. I'm like, it's venture capital, it's meant to be risky. So we're happy to do that. And I think that's been often the complaint of some entrepreneurs is that there are not enough people really happy to take risks. We'll take risks. We'll do stuff, to be honest, where we think we can add value. We can open doors to companies. We can give them momentum fast. And we want people who can leverage that because we hope to give companies an unfair competitive advantage. And that's the only way to make venture capital work because it's a terrible performing asset class globally, and it's even worse in Europe. So you have to have some competitive advantage.
Thank you. So two things for the very young people, or kind of first-time entrepreneurs. Either you have a really great idea, or before you do something on your own, start with existing companies. I don't know, do interns or take jobs and learn the trade from the inside. So this is one thing. And from the question how to approach, I think just an email is all right. Yeah. So look at a specific business angel or investor. Look what they look for. Try to find out what their sweet spots are before approaching them, and then just write an email that makes sense and is well structured and is not 10 pages long. We get this sometimes thanks to Xing. Who founded it is here. And yeah, that's it.
Yeah. I've not really a lot to add other than I'm seriously interested in the team and the disruption potential, and that's pretty much it. We have to end at 4:15, so I'm not raving about my value add.
Team, and I think angel investing is of course a risky business because we're alone. I mean, as an angel, so we don't have all the backup, for example, a VC firm can have, and we don't have time as entrepreneurs to do all the due diligence. So it's a little bit like a woman. I mean, either you love it first glance or not. And probably, I mean, I'm sure that for angels, I mean, you have much, I mean, in percentage, you will invest in many companies that will never be sold. I mean, but this is part of the gamble. But on the other side, you can really meet some fantastic companies like me, for example. I invested in a company, I mean, in Canada called Beyond the Rack, which the co-founder is here. And after 18 months, they're doing 7 million revenue per month. And for the Black Friday, they cleared close to $1 million of closing, which is amazing after 18 months. And if I wouldn't have been an angel investor, I would never be able to invest in such a company because it would have been too expensive and too late stage. So it's true that you need luck, but it's part of the game.
Well, I'm a little bit special as an angel because I try to be very systematic. I know that I will make 75% mistakes, I mean, it will not get traction and just go down the drain. That's no problem with me, and it shouldn't be a problem with the entrepreneur. The key is to find one or two jewels every 10, and that's about it. So this is a risky business, but I think it's a very good business if it's done properly. If you invest really early in the early stages, and you can do some follow-on investments on your winners, I think it's a good business. I mean, it has been working for me for 12 years and for 48 investments now. So I'm not sure it's a bad business. I think it's a good business if you do it properly and if you assume that it's not only failure, it's part of the game. I mean, this is an uncertain world, this is a risky world, and most of the projects will fail, and no problem with that.
May I ask a question myself?
I think Bren May had a comment on that one.
So I have a question to Stefan, because I know that Stefan wants to, his vision is kind of like to have like a truly global business, to establish a truly global business like Amazon or eBay or Facebook or whatever style from Europe. Yeah. So the question is, what the status update on that? How far are you? How it's going?
It's actually, I mean, that's exactly the reason why we've set up White Billiard, and I think it's all early days. But if you look to companies like Mendeley, who are trying to disrupt the academic space, and now with 650,000 academics on a global base, 60% usage from America, and a clear market leader in an emerging niche. That's one thing. And obviously, as of now, I mean, we are here in London, which is pretty much the heart of the ongoing internet discussions around WikiLeaks. We are seed investors of Flatter, which is set up by Peter Sunde, among others. Peter is, for those who don't know it, the founder of Pirate Bay. And Pirate Bay was, in its peak time, responsible for 48% of the global internet bandwidth. So the guys do actually know one or two things about the internet. Flatter is a social micropayment system which has just left the private beta. And it's amazing, and it's currently the only way to actually donate money to WikiLeaks. And I think, yeah, that is probably the most promising among the startups I founded in, or I was founding investor in 2010.
We have heard who you are, with your track records, which are truly impressive. We have learned what it takes to get an idea funded from you and how to approach you. Let us talk a little bit about your exits. Last year, Klaus Hommels, who couldn't make it this year for health reasons, made a pretty visual discussion around exits in Europe, how challenging they are, and that most VCs and angel investors are getting stuck with investments, and it takes too long and it's too complicated to get out. Obviously not true for all investments, but I would like to hear your view around the exit climate. And maybe Brent can start.
Well, IPO was good once. I remember that one. And obviously there's an issue, I think there absolutely is an issue now that the IPO market is pretty quiet for our sector. And it is too much about selling to US companies, which is very much what's happening. Or even, I guess, you've got the Japanese companies coming in. I mean, everybody wants a piece of European internet, so there are still a lot of buyers around, but it's I think it still holds true that, you know, if you're subscale, you will hang on for investments longer than you would like. I mean, there are, of course, the other trend that there is, obviously, is there are, and many of them are here today, you know, the big growth capital, you know, of Fidelities and Summits and GMTs and those sort of guys that are paying, you know, big rounds into the likes of Vente Privé and those sort of companies, putting serious money in at later stage, which means that companies don't have to absolutely get out to liquidate. The other thing that's, I think, going to be interesting is, will we see, and we had them talk at a conference I hosted last year, you know, second market, the likes of that coming in, because that gives you, what would be great is if we could see more European entrepreneurs getting liquidity earlier on without a liquidity event, because that will help them hang on and do a Groupon. In other words, just say no.
Yeah, thanks to my friend Lucas, I invested in Amiando, and Amiando recently sold to Xing, and even though 10 million is not what I would call a dream exit, but it was loved by the founders. So what's interesting here is that this was a pure continental startup, original idea and exit. And I think what we really need in this so-called ecosystem is we need the understandings. We need more the likes of the Christoph Schuhs of Tomorrow Focus and the Döpfners, Wieles of Axel Springer and other understanding big media companies who help building this ecosystem. Because if we don't create this here in Europe, I mean, what I've heard is the value created in traditional media is Europe on a global scale at 28%. The value created out of digital media is Europe 2%. And honestly, I don't want to have my kids raised up in a society which is dominated by US media. And therefore, I think all participants have actually to work on this. And looking back, I mean, I started my first digital venture in 1997. We have actually closed the gap, but let's not forget the Valley has 6 decades of experience with venture capital. They have 6 decades of creating wealth, which goes back to the ecosystem. But we are getting there, as Brent said, because you could have filled up this panel with definitely 20, 30 people, probably only in this room.
I don't see the problem of the exits. I mean, it has never been a problem with me. That's something that takes care of itself. You just own a wonderful company and people come and buy it. I mean, it's not, I have never had a problem exiting a good company. Probably part of that is that I tend to exit early. I mean, I don't need to go to the 1 billion valuation. I'm happy to get in from 2 million to 50 million, and that's it. And at 50 million, I think there is a market. And there is a market, and who is that market? I mean, I have exited to industrial companies like to Telefonica. I have sold to venture capital, which are happy to take the company at this stage and take it to the next level. And I have had even an IPO. So it's one of those things that take care of itself, just like sales. You have a good product, it sells. You have a good company, it sells.
Yeah, I agree that the problem is not so much exit than to be able to create a good company. And if you have a company with sustainable growth and profitable, I mean, in a way you're not in a hurry because you have everything is open. Then I mean, you can make money by dividends. You can do secondary. I mean, private equity, or you would probably find a buyer. I mean, unless you buy others because you're the number one then.
Yeah, I just don't want people to be left with the thing that there isn't a problem. Because I disagree. I think there is. If you're talking about $15 million exits, that's not what's going to really get Europe into the global state that we've been talking about. And it goes back, actually it does go back to the public market issue. And I know, Marco, you will know this and you will see this more than we do from your line of work. And the point is, there were buyers out there, right, it was a unique time. Like lastminute.com, sorry, we bought 14 companies. You know, and we bought many for 50 million plus, you know. So and that's what you want, is aggressive buyers with, let's face it, a paper currency, and that trade on high multiples. Because the other issue is, as you know, the traditional media companies we've spoken about often trade on very low multiples. So to buy your companies for 100, 200 million is going to be dilutive, and they're going to get hammered by their shareholders. So they're not the natural acquirers. They may be able to do it. If you're as big as Telefonica, you can buy 20 for 100 million, but that's rare.
And because they are disciplined, you have to be disciplined as well. Because the buyers for the exit are very disciplined, trading on lower multiples, you have to be disciplined as well.
I don't think it's about discipline. I think it's about shooting the lights out. And it's about aiming for, it's about belief and an optimism. So what happened in the bubble times, and people were wrong short-term, as we've discussed earlier, but right long-term, is people were very, very optimistic short-term. That was reflected in multiples. That meant people could take risks and do things that they wouldn't do, and many wouldn't do in today's market. So there's a real issue, is, you know, and for example, it's the profit imperative is not always a good thing if you're trying to build a global business. And in Europe, we have more than in the US, the short-term profit imperative, and many startups I see are saying, look, I've got to get profitable this month. It's like, well, if you do, then the levers to run your business are actually very limited. And you don't then get to that next inflection point, and you end up selling out for $10 or $15 million when you could have sold out for 100.
And actually, the ambitions should be way, way, way bigger. Why should we always be on the sell side? Let's create companies who can actually be on the buy side, and therefore we actually do need the public markets. Because we did with Ricardo in this first, it was surreal, this first bubble. But we have been able to buy a lot of companies, and actually, as of today, there is, like in the Asterix comics, this little Ricardo.ch, which dominates 90% of the online auction market in Switzerland. And this company, together with their sister in Allegro, was actually worth in 2008 $1.8 billion. So it is actually possible to create this here. But I would love to see more the kind of ambition of the Amazons and likes. I think these guys produced losses for 8 years. Have been public 3 years out of this, but now, these days, they are leading big time. And I mean, we have been able to create this in other industry, in traditional industries. Why should we not be able to do this in digital?
Yeah, the only thing I'm able to add here is, like, what's very important with exit, involve your M&A advisor very early on in the process.
I like to finish at this note. Let's have a coffee. Thank you very much for your interesting comments.